it's a very frustrating market, and we probably end up finishing much higher into year end, and you've waited all year and all the returns come in 2 months. I mean, we're kind of used to this kind of ridiculousness of this market.
Yeah, and it's a tough market, but I 100% agree that the traders have been the only ones rewarded in crypto. The traders and Bitcoiners have been the only ones kind of rewarded in crypto for the last 18 months to even 2 years.
Yeah, and that to me means that there's a bigger opportunity than people can see. Because a lot of people have got their heads conflated with like it's the end of the cycle, it all failed, crypto's dead. And I'm like, no, I think the cycle's been extended for a bunch of reasons, and liquidity is this reason. And once you see it through a liquidity lens, it completely explains what we've been talking about and then why there's all this discounted stuff. So therefore, once liquidity flows, you're going to see a re-rating of the space in a way that people don't even believe is possible again.
Hey guys, welcome to Everyday Finance. The market has been jarred by Bitcoin's most recent death cross, which suggests that the long-awaited negative trend may finally be beginning. After falling to $18,000, Bitcoin was unable to recover its crucial 50-week moving average, which analysts cautioned was necessary to maintain the larger macro upswing. Rather, Bitcoin broke structure and dropped to a 6-month low, falling below both the 50-week and 100-week averages. The 50-day SMAs crossing beneath the 200-day SMA, the traditional death cross pattern that typically precedes catastrophic drawdowns of 64% to over 70%, as those observed in 2014, 2018, and 2022 delivered the final blow. Panic selling by short-term holders has caused realized losses to soar beyond $800 million. It's the largest since the FTX collapse. This behavior can create local bottoms, but only if the price quickly recovers. Historical trends indicate that a further downturn might already be underway if there isn't a swift comeback.
Well, there's a lot of people who've owned this stuff for a long time saying this is one of the foundational principles of crypto, and people forgot it for a while because the governments weren't involved and because big banks weren't involved. It's like, doesn't really matter. And now suddenly it's like, oh, okay, maybe it does.
Yeah, I think, and when we launched, our fund had pretty material holdings in Monero, and it was, one of our biggest holdings for probably a year and a half. Now, the chart actually is not too bad. If you look at it compared to Bitcoin, it's not a disaster, particularly versus a bunch of stuff. But, maybe the time's come. You've seen, as you mentioned, you've probably seen, you've seen governments move much more on a censorship level than they were 7 years ago. And you've probably seen a regulatory regime get less intense in terms of their combat around some of these assets. So we are at an interesting point. So it's not a complete surprise. I think the only thing I would note from us at an institutional level, there's still sort of difficult assets to hold. I remember working with our auditor to try and prove that we owned the Monero. And to be honest, that was kind of one of the best sales pitches I actually saw firsthand. He's actually trying to prove that we owned it to our auditor was super tough. Which is a validation of how hard it is to actually track.
I love it. And what about the AI crypto nexus trade? Barry Silbert's still shilling Tau, which seems interesting, seems to be getting a bit of traction. What are you thinking of looking at in that space, or nothing really interesting for you yet? Just observing it.
Yeah, I think it's super interesting. I think the just like stable coins look inevitable, AI intersection with crypto looks inevitable as well, and stable coins is a key part of that. Yeah, I just think the concern we have at the market, the speculative premium in crypto at the moment is kind of non-existent to negative, and the ability for crypto markets to support big ideas at this point is pretty low. So I think, for funds that, on a venture side where you could take a longer term time frame, where you can have a 5+ year view to see this sort of build out happen, I think it becomes a much more investable asset class to sort of see that happen over time. I guess, we have some exposure to NIR, for example. We've got some exposure in our venture fund around Tau, but it's very much, we would say from our perspective, we're still on a sort of seeing how it shakes out over the next 3 to 5 years. We've got huge conviction that the intersection of AI and crypto will be massive. Where that utility lies and who the winners are, I think we're still a long way from knowing.
The other one that's on my radar screen that's at that nexus is the digital idea, like the WorldCoin idea. Is like, that's inevitable, whether it's WorldCoin or whatever format, but somebody's going to have to do that because we need a token to pass to get onto all of this stuff without proving who we are and to prove we're humans, proof of humanhood.
Yeah, and it's just such a incredible, such an incredibly big idea, and I think it's such a frontier sort of tech idea. I think we're a little way away from the market.
So what you're saying is the secondary markets don't have the liquidity or the capital to reward the long-term big ideas right now, generally.
Yeah, I would argue particularly on, and that's why we're seeing that disconnect. I mean, WorldCoin's a good example, right? Like I've seen, some of the best perspectives I've seen on the need for exactly what you're talking about. That sort of proof of life, proof of realism, comes from Mark Andreessen, right? Like he talked about, and one of the best examples he gave, which resonated with me, is as you start to move forward into elections, how are you going to tell what's a real Donald Trump interview and statement versus what's just an AI generated one? I mean, and we're seeing on the other side, you're seeing the ability for AI to generate what looks like to be real. We've kind of crossed that nexus, right? Like you can kind of fool the vast majority of the world using AI. So the give and take of that is, one, scams, but particularly around things like political advertising, political statements. You're in a world where how do you know what's real anymore? And so you have this huge idea that WorldCoin's looking to serve, and then it becomes super unsurprising to us that you see A16Z moving to the market and buy a massive amount of WorldCoin off the market because they kind of get the long-term trajectory there that the short-term.
I didn't see that. They bought a bunch on the open market. Yeah,
well, from the foundation, I think it was, right. I'll get the numbers wrong, but it's a pretty big number in the kind of 9-digit number of dollars into WorldCoin from the foundation, because they can take that long-term bet. They can see the long-term trajectory here.
And if it's started by Sam Altman, he's probably got some decent plan of how to integrate this into something broader.
Yeah, because I think we can all see the use case there, but that's a big idea, right? And I guess I would suggest we're in a market where we're seeing a massive disparity between crypto day-to-day to be able to value big ideas well. And so we'll start to see that disconnect happen more and more, where longer-term investors with big patient capital will start to buy and fund these ideas. And I suspect they'll do super well over the next 3 to 5 years from short-term people that are looking for the next thing with a month-to-month trajectory.
And so it's difficult in hedge fund land right now because there's a lot of value and not enough momentum. And we've gone through a horrific year of chop so far, really. Yeah, Bitcoin's managed to eke its way higher. ETH had its rally from its lows, and it's now kind of in line with where it should be. But it's tough, right? Because unless you're a trader, you can't make money. You can't sit on anything because there's not enough liquidity. So the alts market bleeds, even if it's cheap. But it's super attractive, some of this stuff.
Yeah, I mean, the high level stats are, depends how you cut the numbers. But anyway, you look at it, app revenue now is, multiples bigger than blockchain revenue or protocol revenue. It's grown triple digits over the last 12 months. And almost all indices that include apps and strip out mega caps are down 50 to 80%. So,
and you've been flagging this for a while, that the DApp economy is going to be the big thing, and it is. But the market's not rewarding it because of the shortage of capital, it seems.
Yeah, and I think the interesting thing is, how token prices perform doesn't stop the revenue from growing. So the apps continue to do their thing, right? And they continue to generate, $7 to $10 billion in revenue. And there's only that dam's got to break at some point, right? Like you can't have tech that's growing at triple digit, quadruple digit in some cases, that trades at low single digit, multiples of revenue. At some point in time, that's kind of got to give. And I think that's where DATs were kind of an interesting sort of first look, and it'll be interesting to see where they go, particularly as we sort of work down the stack over the next 12 months. At some point, liquidity will find that value, but patience is required.
Yeah, and it's not like we haven't been here before. It's just been a very frustrating market, and we probably end up finishing much higher into year end, and you've waited all year, and all the returns come in 2 months. I mean, we're kind of used to this kind of ridiculousness of this market.
Yeah, and it's a tough market, but I 100% agree that the traders have been the only ones rewarded in crypto. The traders and Bitcoiners have been the only ones kind of rewarded in crypto for the last 18 months, to even 2 years.
Yeah, and that to me, means that there's a bigger opportunity than people can see. Because a lot of people have got their heads conflated with like it's the end of the cycle, it all failed, crypto's dead. And I'm like, no, I think the cycle's been extended for a bunch of reasons, and liquidity is this reason. And once you see it through a liquidity lens, it completely explains what we've been talking about and then why there's all this discounted stuff. So therefore, once liquidity flows, you're going to see a re-rating of the space in a way that people don't even believe is possible again.
After a vicious 15%, today decline that cost hundreds of millions in lengthy liquidations and caused Ether 2 collapse to almost 50% from its August peak. It fell to $2,625, its lowest level in 4 months. Even still, futures data reveals minor indications of institutional players making a comeback. Annualized funding rates on ETH perpetuals have increased to roughly 6%. Suggesting that traders may be preparing for a relief rally toward $3,200 and improving the balance between longs and shorts. Macro pressure is still a significant hindrance. Concerns about unemployment and the expense of living are becoming more prevalent, according to consumer surveys. The real estate market is weak. Home Depot and other retail behemoths report lower big-ticket spending. The US dollar has strengthened as a result of this stress, which has drawn liquidity away from cryptocurrencies and contributed to 9 days in a row of outflows of more than $1.3 billion from spot ETH ETFs. Nevertheless, as ETH gets closer to $2,650, leading OKX traders have been subtly increasing their long position, indicating that some think a local bottom might be developing.
The other feature of this market is, you alluded to earlier, we've had no real new liquidity in outside of the very top end. And that's a function of this has all been generally driven by retail. And retail in most places don't have any money because, prices went up a lot. Interest rates haven't come down much yet. The economy still, the actual economy, look at the ISM survey, still below 50. So it's not even expanding. And then you're like, well, obviously they're not throwing money into crypto because they don't have any.
Yeah, I think the other factor to put on the table as well, there's been pretty good money to make in some other speculative sort of high-risk sectors as well, right? So a bunch of AI money, quantum computing stocks, those sorts of things. So, the attention around, particularly around that speculative dollar, has been kind of split, I would say, around crypto as well, and I would put that as a factor. I think what crypto is waiting for, and I think a Clarity Act is we've seen Genius Act and Clarity Act on the horizon as well. What it's waiting for is that transition from, and the transition has to happen, right? Because the ownership of crypto is just so skewed retail versus institutional versus anything else you look. Is just those building blocks in place to allow that institutional ownership to kind of take over. And I would argue we've seen that in Bitcoin and Ethereum through the ETFs. It's the broader sector's term for that to happen over the next 12 to 24 months.
What about Australia? Is it pulling forward yet? Are people coming through? Are institutions investing? I know family offices have because they've always been earlier, but Australian retail was not really involved. Australian institutions definitely worth. While you've got massive pools of capitals that trapped there.
Yeah, I think on the ownership side, it's actually not too bad. If you look at, there's a survey out that I think had Australia number 2 on ownership across population size.
Oh wow!
Last week, so Australians, you've spent some time in their market. They're not afraid of risk and they're not afraid of gambling, right? So, it's a capital market that's been built off kind of blue sky mining. Dig a hole, could be worth zero, could be worth $1 billion. So, Australian investors are used to handling volatility and allocating to volatility, and that goes from institutional down to retail. So I think the retail ownership here is actually pretty good. So I think it's like 30, 40 billion of retail sort of ownerships. If you look through some of the surveys, average holding sort of 10,000, it's actually pretty good penetration. The local exchanges in particular have done a pretty good job of educating and expanding that market. I would say the institutional market here probably lags substantially what we've seen in other kind of developed markets, where retail is probably at the sort of forefront, institutional market's not. Institutional market here is incredibly conservative. As you point out, it is a huge pot of capital. It's probably, our pension.
But they're massively regulated in what they can do, right?
Massively regulated and extremely tied to long tail long tail risks, right? So, I mean, the catchphrase that I've kind of used in my business when we've started, and this is when, when I started DACM, I've spent most of my time meeting with offshore LPs, is, Australia is a great place to sell a toll road or an airport, not to forget funding out of our institutional market for sort of frontier tech. And that matches the liabilities and the risk framework of the money they're managing. Now, I think that changes over time. We've seen one of the biggest and oldest institutional investors down here, a group called AMP, which has been around over 100 years, manages close to 100 billion, made the first step into Bitcoin back around mid last year, got reported on at the end of last year. And I'm not sure whether they're going to prove the causality, but they actually had their largest inflow month, I think in 7 years on January on the back of that, from basically differentiating themselves as a Bitcoin owner. So I think momentum on the institutional side is positive, but Australian institutions, probably rightly so given their money, their manager are super conservative about allocating to sort of high risk, high vol assets.
The other feature of the market that has been really interesting is stablecoins. Obviously, after the Genius Act, that's been good. How do you see this playing out now? And how beneficial is it to the underlying kind of value accretion to the networks?
Yeah, look, I think, to be honest, I've kind of been banging on about this for years. And it's one of the key reasons I got into crypto when, started to trade around a bit on the exchanges, started to see the frustration back in early 17. Bitcoin would have high teens, low 20s spreads across exchanges between, say, Bitfinex and Apollyon X. That's kind of like, this is weird. Like, but and then I'll be trying to wire cash and it'd take 5 days to turn up if it turned up. And you kind of get why you've got those disparities. And then found this thing called Tether, which back then operated on the Omni blockchain. And it kind of made me super excited that the IQ behind this system is sort of super smart, that someone's worked out, let's unitize dollars and allow them to move at blockchain speeds. Now, I think Tether was like 10 to 20 million bucks at that point in time, and I actually minted some back in, I think, March 17 and sort of worked it out. And to be honest, it was one of the key reasons I committed to the space. I thought if people are coming up with such cool ideas like that, this space has got a real future. And then we see where it goes today, and it's obviously growing into kind of the behemoth of the space. And if you think about it, the ability for tethers at both a utility level for crypto, but also at a strategic level for the US, I think is quite incredible. Like, I guess we've been kind of early advocates that the ability, and I think we're kind of helped because we live in Asia and we've seen that penetration of, tether, particularly through Asia, from both the retail level up to the corporate level. We meet family-run businesses that do hundreds of millions in revenue in tether through Asia every year, right? And they're selling, building materials or traditional
furniture or whatever.
And they're taking tether, right? And I guess I think Asia's been at the forefront of that, and I guess
because they've got a lot of friction and capital controls. If you've got like a ringgit yuan cross rate, it's not liquid. But if you can just do it in stable coins, you can make instant payments, dollars in, dollars out, instantly.
Crypto. Markets continue to be severely impacted by broader economic challenges. A risk-off atmosphere has been exacerbated by low consumer confidence, difficult financial circumstances, and increased household stress. As capital shifts into a stronger dollar, liquidity has dried up in digital assets, leaving cryptocurrency vulnerable to ongoing selling pressure. A change in these macro forces new ETF inflows, better economic signals, a declining dollar, and a financial climate that lets riskier assets breathe again will be necessary for Ethereum to regain momentum and move back toward the $3,200 range. These elements might coincide in the upcoming weeks, but in the meanwhile, Raoul Pal cautions that the next significant stage of the cryptocurrency cycle is being shaped by the liquidity pressure that both Bitcoin and Ether are currently experiencing.